Hello, I'm Sarah Fennick and welcome to Bank to Binary's Asset Roundup for March 2014, where we will be taking a close look at the events that moved the price of oil last month. The movement of oil prices this month closely followed events in the Crimean region. At the beginning of March, energy consumption slowed due to disappointing manufacturing activity in the US following the harsh winter weather. Oil prices suffered a strong pullback from an over 5-month high as tensions in Ukraine eased. Into the second week of March, US crude oil rose by almost 6 million barrels, twice as much as had been originally forecasted. The rise was partly explained by distribution issues in the Gulf of Mexico, but much of the speculation was caused by rising tensions between Ukraine and Russia. Oil prices continued to climb and leaped by $2 a barrel as a result of the Russian army advancing into Ukraine. Fears of escalation of the political situation spread through the commodities markets as the West threatened sanctions against one of the world's largest energy producers. Immediate reaction from global commodities markets resulted in oil futures surging to $104.51 a barrel on the New York Mercantile Exchange, the highest level since 23rd of September 2013. Uncertainty as to how the Crimean struggle would play out heightened fears that Europe may be cut off from a vital source of energy. With continued momentum in Russian military moves, oil prices surged to its highest level for the year so far at $111.40 a barrel. Fears of global price spikes were compounded by data released by OPEC after it raised its forecast for world oil demand. US President Barack Obama declared that Russia would face strong opposition from the West and significant economic sanctions if the military intervention in Crimea continues. This global power struggle between Russia and the US has peaked at an interesting time. A pertinent question arises as a result of these struggles. Will the US be encouraged to lift its long-standing oil export ban? With US oil production reaching its highest level for 25 years in 2013, members of Congress have highlighted the opportunities for the US as a major supplier of oil. There has been a self-implemented oil ban in place in the United States since 1970s. Yet, with recent developments in hydraulic fracking, America has moved from a position of scarcity to oversupply of oil. Oil reserves in the US are said to rival both Russia and the Middle East, and it is perhaps the right time for the US to assert themselves as an energy superpower. A major trading partner and political ally, the Eurozone remains at the mercy of unsteady governmental regimes. This arrangement would consolidate the relationship between the US and Europe, further propelling the US as a commodities powerhouse. The US is keen to punish the Russian government's aggression by driving global oil prices down by an estimated $12 a barrel, selling 500,000 barrels a day from its domestic reserves. This would provide double the amount of oil required to cover any international coalition agreement between Russia and the West. It is estimated that this would cost Russia $40 billion in lost income, or 2% of its economy. International legislation may object to this blatant manipulation of prices as the US contemplates making short-term emergency oil supplies available. With global shortages and American oversupply of oil, it seems a simple solution to a sensitive problem, but may face some opposition. Many of the actions by Putin have been to assert his power over global energy markets, and the Eurozone in particular, and the prospect of competition from the US could take the wind out of his sails. The US administration is already implementing a test of supplying 5 million barrels through various distribution channels, but holds 696 million barrels as a reserve. US government officials have been keen to stress that the test has not been initiated by the Ukraine situation. The global oil struggle is likely to continue. The only certainty in this situation is that 2014 will prove an interesting year for commodities investors. I am Sarah Fennick, and this has been Bank to Binary's Asset Roundup for oil for March 2014. Don't forget to contact your account manager about this week's investment opportunities, in particular US non-farm payrolls, scheduled for release on Friday the 4th of April. I hope you all have a very successful week on the markets. Until next month, goodbye.